Hello, everyone. I'm Jared Hall. It's Monday, March 10th, 2025. Welcome to the week ahead. The markets declined drastically last week, closing down 3.1% for the week, pushing the S&P 500 benchmark into the red for the year amid worries about tariffs and weaker than expected February jobs report. Last week, the third marked the third consecutive down week. Looking at the current depth of the drawdown on the S&P 500, we are sitting at about an 8% pullback from the highs. The tech-heavy Nasdaq index is down over 11% from the highs. Investors are worried about economic impacts from the Trump administration's tariff policies as well as job cuts. Earlier this week, the administration said it would be placing 25% tariffs on Mexico and Canada, though it later delayed some of the tariffs by a month. Meanwhile, its Department of Government Efficiency has been cutting jobs across the government. The February employment report showed non-farm payrolls rose by 150,000, which is smaller than the increase of 160,000 jobs expected in a survey compiled by Bloomberg. The unemployment rate rose to 4.1% in February from 4% in January. No change had been expected. Healthcare was the only positive sector for the week last week. Financials had the largest percentage drop, sliding 5.9%, followed by a 5.4% decline in consumer discretionary and a 3.8% loss in energy and a 3.4% decrease in technology. Looking at the chart of the S&P 500 index, we wanted to show you the key levels that we mentioned earlier. The 200-day moving average is being broken, highlighted in the blue circle. The blue box represents support levels that we think the market might receive a bounce off of. Support is defined as an area where the equilibrium between sellers and buyers rebalances and the market moves back upward, or at least stalls the downward momentum. Looking ahead to this week, economic data will feature the February Consumer Price Index and Producer Pricing Index, two closely watched inflation readings. Outside of these two reports, the market will be looking for price stability or a flushing of price action. Flushing is felt whenever the market panic seems to hit a temporary high and lots of traders capitulate at once. Again, with the recent spike in market volatility, we want to encourage our clients to zoom out on their view. Think about your entire financial plan and all of the other market storms that you've weathered. You'll make it through this temporary hiccup as well. That's all for this week. Thanks for watching. Be sure to follow along with us for more content like this.